Mike, thanks very much for inviting us to the London offices of Nuveen. New brand for 2019. Just let us know what's behind that.
The new brand is all about simplicity and leveraging the platform that is Nuveen, which is $1 trillion asset manager. For example, the retail distribution that they do so well in the US, and we've already launched 2 products on that platform. So distribution is certainly one. Simplicity of brand, Nuveen, real estate, Nuveen asset management. It's much easier for clients to understand that we're the real estate arm of $1 trillion asset manager, rather than perhaps having an individual brand. So there's a simplicity to it, and of course there's the scale. We benefit from the operating platform that you'd associate with $1 trillion asset manager.
And has that influenced the strategy of the business?
Yeah, well, one of the key things in communications with clients and indeed all stakeholders is nothing else has changed. The people are the same, the strategy's the same, what we sell hasn't changed, which is performance. Our vision hasn't changed, our mission hasn't changed. When I look at the 3 sort of major component parts about what we offer our clients in terms of real estate, we start with performance, of course, but then what we also offer as a global business is boots on the ground in 26 office locations, and we offer sector expertise. And of course, the ultimate piece to that is great ideas and tomorrow's world thematic, which has been synonymous with our brand for the last 4.5 years. That's not changing.
As a global business, Mike, you're obviously seeing a lot of the key trends. In terms of those, what do you see as the ones that are most influential on your business and your strategy?
Well, I think to answer that question properly, you also have to have a view to where you are in the current market cycle. And with all the geopolitical tensions, whether it be trade wars, whether it be that horrible word Brexit, we're at the end, should I say, or very late cycle in a real estate market. And so you've always got to have that at the back of your mind when you're dealing with all these other geopolitical and perhaps a slowdown in economic growth. So all of those things are brought to bear on the real estate market. Our challenge, of course, is that our investors' allocations to real estate and indeed real assets is probably below where they want to be. So we've got to invest. They want us to continue to invest, but they want us to invest that wisely, selectively, and to generate long-term returns. Hence, that strategic piece around investing in tomorrow's world and, importantly, tomorrow's cities absolutely stays at the heart of our investment process.
And in terms of geographies, are you favouring particular geographies, obviously with that global view, whether that's Europe versus Asia versus the US? What's your sense of that in terms of strategy?
It's a nice to have, but as you probably well know, the world is far more correlated than it used to be. There aren't any cheap core real estate markets out there. So what we're obviously trying to uncover is, along with the city strategy, what are the sectors that are really offering better growth potential than others, perhaps. And you look at the logistics sector, we think that's fairly robust. On the other hand, we look at the retail sector and think, well, perhaps that's an opportunity going forward if you own the right sort of retail and if you adapt to changing consumer demands. So every sector has an opportunity within it. It's just the timing of when you enter and exit those markets and being very well aware of the risks associated with doing so.
And if we look towards the markets for 2019, what's your sense of the outlook for the key markets that you're operating in?
Look, 2019 is going to be more challenging than 2018 on the back of being late cycle. The markets that investors want to be in being very expensive, yields are at peak historic levels. So as I said earlier, what we're really looking for is those markets which we think are going to remain robust. Hence, we're driven to certain cities where we think people want to be. So that location has been replaced, if you like, by people, and that urbanization piece in our city strand. So places like Berlin, Paris, we think are very robust. On the other hand, people are very quick to sort of look at London and say, well, London's going to suffer post-Brexit. Well, it hasn't suffered so far. Demand is relatively robust. There hasn't been a lot of supply. There's not a lot of development coming online, and there's not a lot of leverage in the system. So if you look at London as a global market and accept the fact that there may be some occupational softness, as you would expect at the top of a 10-year cycle, actually on a relative yield basis, London looks attractive going forward.
Always great to talk to you, Mike.
Likewise.
Thanks very much for inviting us here to the offices of what is now Nuveen in London. Thank you.